I mean, when you look at the risk appetite asset picture, it's a lot that we are facing. The China concerns, the war in Ukraine, these inflationary risks, Fed hikes. Just how much do you try and allocate towards risk in this environment?
So we have been reducing, since the beginning of the war in Ukraine, our allocation to risk assets. We used to be overweight 4% into equities, and since then we have reduced our exposure by something like 10%. So we have sold 4% of equities, and we have put in place put spread strategies in our client portfolios to protect them on the downside. So that's why now we have effectively an allocation of 6% underweight in equities. And as you were mentioning, the three risks are well identified in the market. The situation in Ukraine and Russia is probably a situation of escalation of conflict right now. So that's still the biggest worry that we have as far as risky assets are concerned. If we look at the situation in China, the COVID-19 situation and the zero COVID policy are hurting growth, and we do expect much less growth in 2022 than what the authorities were expecting.
Yeah.
And the last issue of inflation, especially in the US, has been tackled by the monetary authorities, and we have a path of interest rate hike and quantitative tightening that is well identified by the markets now.
We look as well amidst this backdrop of dollar strength, and that's playing through into EM too. I mean, we saw the rupee hit a record low. We've got the yuan at an 18-month low, and in fact, the yuan rout creating the most oversold conditions since the 2015 devaluation. How much further dollar strength do you see? How much further pain to EM do you see?
I think we have already seen a lot of dollar strength. So we have been actually reducing our overexposure to US dollar. We are still overweight, but only by 3% now in our client portfolios. And as you are mentioning, Juliette, really there is an impact on emerging market because the spread between the emerging market in terms of yield versus the US dollar is shrinking, and therefore that makes emerging currencies less attractive. But all emerging currencies are not equal. The ones that are the most vulnerable are the ones that have spent the most money in order to tackle the COVID-19 crisis, and also the ones that are more dependent on energy imports.
When we look at the overall picture in Asia, we've got regional stocks, as I mentioned, pairing some of those earlier hefty losses, but we're still down for a seventh day. Now, this is the longest losing streak we've seen since the height of the pandemic in March 2020. Where do you see some opportunity here in Asia to snap up some of these heavily beaten sectors and stocks?
I'm not sure that the opportunities are yet in Asia. We have a preference for US stocks over European and Asian stocks. But there is a point where I think it will be interesting to consider the Chinese equities as a buying opportunity. We are not there yet. We are coming from an underweight position in Chinese equities, and we are now neutral. We are not courageous enough yet to get overweight. We need to see a bit more positive help from the Chinese authorities, whether on the monetary side or on the fiscal side, in order to give us more confidence in their market.
That impact, though, of the China slowdown very much hitting the base metals market, being reflected in the likes of copper, in iron ore. You are favouring commodities, though. Tell us why.
Well, commodities are a very good edge against inflation. So if you are worried about inflation, that's one situation. In terms of global asset allocation, what we are recommending is diversification. So we recommend to invest still into equities, but we have a preference for a value and quality bias. We also start to find government bond attractive, whether the nominal side of them with US 10-year Treasury yield coming close to 3.25, and also having real yield close to 0.3% positive, which is good news. And then we want to diversify this exposure with European real estate, for instance, which is linked very often in terms of rent to inflation. And then, as you were saying, a broad-based exposure to commodities, including energy, including precious metals such as gold, and including industrial metals such as copper, for example.
You mentioned it's a bit too early to get into Asia at the moment. I did just want to get your thoughts, though, on what we're seeing in the Philippines with this reaction to the election result, or the projected election result. We've seen the peso in particular as well being hit hard, hitting a three-year low yesterday. What sort of, allocation do you have to the likes of some of these smaller Southeast Asian nations?
So we will be cautious right now on Philippines, because one reason why the Philippine peso has been reasonably stable lately was mainly due to the moratorium on fiscal spending. Now with the new government coming into place, we do expect that there will be quite a lot of investment in infrastructure. And then, the current account situation is not great in Philippines. The balance of payment is quite negative. So we do expect that to continue, and therefore we are not very positive on the Philippine peso.